So today, we're diving into the story of Auddia, a tech company that's truly at a make-or-break moment. Their stock has taken a massive 85% hit, and now they're going all in on a pretty radical new plan. It's a story that has it all: cutting-edge AI, a really complex merger, and frankly, a fight for the company's very survival.
And that really brings us to the biggest question of all, the one that's just hanging over everything they do. How on earth does a publicly traded company with literally $0 in revenue even begin to plan for survival? It's a huge question, and the answer? Well, it's anything but simple.
And look, don't just take my word for how serious this is. The company's own independent auditors put it in black and white. This is a direct quote from their report. You know, when the folks who are paid to check your math start using phrases like substantial doubt, that's about as big a red flag as you can get. This isn't just a bump in the road, it's a full-blown existential crisis.
Let's just put some hard numbers to this. For fiscal year 2025, Auddia brought in zero revenue. At the same time, they lost $7.7 million. With only $3.2 million left in the bank, their runway, that's how long they can last before the money's gone, is set to run out in the second quarter of 2026. The clock is definitely ticking, loudly. But even with financials that grim, Auddia is convinced they're holding an ace up their sleeve. They believe their one shot at salvation is a unique piece of AI technology that could completely change how we listen to the radio.
So how does this thing actually work? It's actually pretty brilliant in its simplicity. First, the AI, which is running inside their app called Fighter, listens to a live radio station. Then, it uses its training to pinpoint the exact moment a commercial break starts and ends. And finally, poof, it just swaps out that entire block of ads with a song from a new up-and-coming artist. No more commercials, just more music. And this is really how Auddia is trying to set itself apart. You've got your traditional apps like iHeartRadio or TuneIn, right? You turn it on, you get ads, it's pretty passive. Auddia's whole pitch with the Fader app is something totally different, a personalized, ad-free experience that helps you discover new music using AI. They're betting that none of the big guys can do that.
Now, the secret sauce here, the tech behind it all, is called distributed inference. This is their patented method. So instead of your phone sending audio to some giant server in the cloud to be analyzed, the AI does all the work, figuring out if it's a song, an ad, or a DJ talking right there on your smartphone. It's a huge deal, and that decentralized approach is what they see as their main competitive advantage.
So, with this cool tech in hand, Auddia made a massive strategic pivot. They figured out that trying to sell subscriptions one by one directly to listeners like you and me was just too slow and way too expensive. So, they decided to target a whole new customer, the artists themselves. And this is where their entire strategy shifts.
Probably the best way to wrap your head around this new B2B model is to think of Auddia as a construction company. And they're building a bridge. They looked out and saw two completely separate groups of people, each with a big problem, and realized their technology could be the bridge that connects them.
Okay, so here's how that bridge works. On one side of the river, you have millions of people just passively listening to regular old AM/FM radio. On the other side of the river, you've got thousands of new artists who are absolutely desperate to get their music heard. Auddia's Discover Radio platform becomes the bridge. And the toll to get your music across that bridge? It's a monthly subscription fee, paid by the artists.
And you know what? The early results from their pilot program are actually pretty impressive. Artists on the platform are getting, on average, 116 plays on the radio every week. But what's even crazier is the click-through rate. When a listener hears a new song they like and taps to find out more, 30% of them are clicking through to the artist's page. That's a huge number, and it shows people are genuinely engaged.
But here's the problem. A great strategy is one thing, but you need money to build that bridge, money that Auddia just doesn't have. And that brings us to the most dramatic part of this entire story, a complicated, high-stakes merger that is truly going to either save the company or sink it for good.
Now, before we get into the details of the merger itself, we have to understand this one critical term, a related party transaction. This is just a fancy way of saying a deal between two parties that already have a relationship. And in this case, it's a big one. Auddia is merging with companies that are already owned by its own CEO, Jeff Thramann. So this isn't about buying some outside company. It's about consolidating the founder's own assets. And that structure, well, it raises some serious potential conflicts of interest. So here's the blueprint, their plan for survival. Auddia is going to merge with 3 other AI companies, all of which, again, are owned by the CEO. The new, bigger company would get a new name, McCarthy Finney,
and a new stock ticker, MCFN. The whole point is to create a stronger company on paper, hoping that combining all these assets will look more attractive to new investors.
And this is the most important part of the deal for anyone who already owns stock. After the merger, Auddia's founder, Jeff Thraman, would own about 80% of the new company. The existing Auddia shareholders, the ones who've been hanging on through that 85% drop, would see their ownership shrink down to just 20%. Let me put that plainly. For this lifeline to work, they have to give up 4/5 of the company. It is a massive, massive dilution.
Oh, and there's one more little thing. A huge catch, actually. The entire deal depends on Auddia raising $12 million in fresh cash before the merger can even happen. That money is what's supposed to fund the new company. But for a business with zero revenue, that is an incredibly tall order. Without that $12 million, the whole thing just falls apart.
The risk here is so real that the company literally has to warn people about it in its official SEC filings. This quote is basically a legally required warning label. It's saying, hey, even if this deal goes through, you shareholders who are giving up 80% of the company might not see a benefit that's even worth it. It is the textbook definition of a high-risk gamble. So when you boil it all down, they're staring at two very different futures. If the merger fails, Auddia has to pay termination fees and expenses, which would probably be the end of the line for them. If it succeeds, they get a chance, a financial lifeline, but at the staggering cost of giving away most of the company. There really is no easy way out of this. Okay, so to try and make sense of all this chaos, let's turn to an independent analysis from a firm called HDIN Research. They provide a pretty objective, expert take on Auddia's whole situation.
And their scorecard, wow, it tells the entire story in 3 numbers. On financial stability, they get a dismal 1.5 out of 10, thanks to the zero revenue and that auditor warning. But on strategic clarity, they get a strong 7.0. The analysts agree the pivot to artists makes a lot of sense. The weak link, though, is execution ability, a 3.0, because they have a tiny team of just 5 people, and everything depends on this merger going through.
And the final verdict from the analysts is, well, it's pretty blunt. They describe Auddia as being in an ICU state and facing extremely high risk. It's a powerful and honestly a pretty sobering way to sum up just how fragile this company's situation really is.
Which leaves us with the ultimate question, right? They've got this really promising technology, but absolutely dire financials. So is this a bold blueprint for a legendary turnaround story? Or are we just watching a cautionary tale about dilution and desperation unfold right before our eyes? Only time will tell.